Welcome back, traders and investors. We have a very special guest on this morning. We have the Reverend Emmanuel Lemelson, and he is founder and president of Lantern Foundation and chief investment officer of Lemelson Capital Management. And you're quite a ways from us, aren't you?
I'm sorry, quite a ways, you said?
Well, yeah. Are you in Massachusetts, or you? I know. I also see you work overseas.
Yes, at the moment, just outside of Boston.
Oh, okay.
Uh,
Not
yeah,
that.
we're located. We have an office in Marlborough, Massachusetts.
Okay, so just you got quite the diverse background. Could you just give us a little bit of your education and then your background in the markets?
Absolutely. First of all, thank you for the invitation on the show. I'm happy to be with you this morning. In terms of my education, I studied for 4 years at Seattle University in Seattle, Washington, where I received a bachelor's in theology and religious studies, which was really a pivotal time in my life because I had an opportunity to meet an absolutely tremendous visionary religious and business leader, Robert Spitzer, Father Robert Spitzer, who later became the president of Gonzaga University. After that time, I had an opportunity to study for about 4 years at Holy Cross Greek Orthodox School of Theology in Brookline, Massachusetts, which was also just an incredibly positive experience. In terms of experience with the markets, I was always interested in the markets from a very young age, but can't say that I had a very clear framework until eventually around 2009, picked up a copy of Ben Graham's The Intelligent Investor. And that was sort of like being struck by lightning. I mean, it really brought an entire lifetime of interest in the marketplace into extreme focus. And from that time on, what became sort of just maybe an average or slightly above average results with investments in public equities became something better than average.
Okay, so you're also a clergyman, and let's talk a little bit about the pros and cons of being clergy along with being active in the financial markets.
Sure, absolutely. Well, I'm not sure there's a con, but if there was one, if forced to think of one, it might be that there's always the likelihood for misunderstanding. I think generally people look at public marketplaces and they say, well, this is a place where a lot of things that happen, maybe something less than honest. But that doesn't have to be the case, and I don't think it is. In terms of how clergy worked traditionally, in the history of the church, most clergymen maintained lay professions. The idea that the clergyman is necessarily dependent on a community financially is something of a later innovation. So in Eastern Christendom, it's still common that many clergymen maintain, with the blessing of their bishop, what's called a lay vocation. In the Western Church, the Latin or Catholic Church, it still is carried on in a little bit more formal environment. Some examples that would be the Jesuits, for example, many of whom have very advanced lay professions in addition to their clergy identity. So that would probably be one of the cons. I think the pros is that you have an opportunity to understand your work or your avocation in a greater sense of your role as someone dedicated and really married to the church. And that can be incredibly important when it comes to being detached from things and seeing a bigger picture. What really is the meaning of this work? I hope that answers the question.
It sure does. So, what markets do you follow? Do you follow the commodities and futures, stocks? Where's your focus?
Well, without question, the focus has been in the last 4 or 5 years on common stocks and U.S. markets. And the reason for that is that from time to time there's been really some extraordinary bargains available if you're willing to do the work. And very often you can make a common stock act like a bond if it's purchased right. And looking at other markets, there may be great opportunities in other markets, there's no question, but there's been so much opportunity in the U.S. I'm not sure why there's a need to go very far outside the U.S., at least in the last 4 or 5 years. And but I think it's almost a timeless notion that people have that somehow if they go to a foreign or distant land, they're going to find greater riches. And having traveled a great deal in the last 4 or 5 years, I can tell you, America is really a great country. And the mentality that is bred into our business leadership is just unparalleled and really a very high trust society. Occasionally, from time to time, there's fraud, of course. It's human nature, but I think you're much safer investing in U.S. companies, and the prospects for the U.S. just look incredible because I can tell you it just doesn't exist in other countries. And particularly in Asian markets, these are not really mature capitalist systems, and it's probably an inordinate risk investing in these countries that you're not going to have access to the kind of information you're going to have in the U.S. So every investment should really be looked at from perspective of protection of principle, and if it's really the margin of safety you're after, you're going to want to know as much as you can about a security before you allocate any capital. The best way to do that's right here at home.
You made an interesting comment there. You said, a common stock, you can almost treat it as a bond. Can you elaborate on that?
Absolutely. So if you're looking really for the sort of margin of safety that value investors would typically look for, and value investors, of course, people throw that term around loosely. The number of the population that's really predisposed or hardwired, if you will, towards looking for the proverbial dollar bill for 50 or 60 cents, they're really a statistical minority. If you're buying common equity, and you're buying it for less than tangible assets, for example, the company's paying a dividend, you're not only getting these payments like a bond, but you have an opportunity to participate in the growth of the company, its equity. And that's really important if you believe that inflation is going to be a reality in the future. And it will be. I mean, any government that maintains a deficit or borrows money, they're going to be very interested in inflation and eventually devaluing their own monetary units. So, being on the equity side, if bought right, it's almost like an equity bond. But that does require a lot of patience and a lot of discipline and a lot of focus.
Okay, so
you can't find many great ones.
So would you say that you take more of a fundamental approach to the markets or to the issues that you trade?
Oh, absolutely. Yeah, sure. I think that, I'm not sure how one can competently allocate capital consistently over any length of time, any appreciable length of time. Anybody can be successful in the short run. I mean, you could walk into a casino and you could play blackjack and win on your first hand. But if you were going to compound capital over an appreciable length of time, you need to be very fluent in how to read financial statements. And you need to be able to really try to protect principal by buying productive assets for less than their intrinsic value. If you can do that consistently, your capital is going to compound and you're going to do extraordinarily well. There's no question in my mind.
What about technical analysis? Do you ever look at the charts?
I don't believe there's any value there. I really don't.
No value at all.
I think that when you're doing something like that, I think you're trying to look at a historical behavior of a large group of people. And I'm not convinced that groups of people behave rationally most of the time.
So how do you pick your targets and your entry points?
Well, studying stocks is something that takes time. You've got to really get into the annual reports and the interim reports and try to understand what the management team's saying. You'd want to look at least 10 years of financials and try to figure out if the company's been consistently profitable. Usually you're going to be able to buy something for less than it's worth if there's a misunderstanding of the market or an overreaction. So if there's some negative news and a stock might sell off tremendously, because you have to get in there and figure out, is this an overreaction or is it something real? And usually if you're willing to wait and you know what you're doing, particularly in particular sectors or with particular equities, sooner or later you'll be able to buy something at pretty good value and you'll do well. Especially if you can find companies that long operating histories, consistency with their earnings, their free cash flow. There's a lot of safety in that.
Do you use options at all in your trading?
Rarely. I think there's a place for options, but rarely. It shouldn't be too much of a need.
Okay.
Yeah.
And, you were, I believe, the top hedge fund manager rated by Barron's in 2013. And, good year in the markets. What do you think's been the key to your success?
Well, glory be to God, first of all, that occurred. I didn't realize that would happen. And, I would say that the key to the success is really, prayer, actually. If you're so predisposed to faith, a few things can be more efficacious than prayer. I think it really focuses the mind, and it creates a sort of prerequisite detachment that allows us to think about our work in a greater sense of what we're meant to be doing and, frankly, the good that we can do with our work.
Okay.
From a Christian perspective, at least.
Okay. You wanted to discuss capital allocation as stewardship. Do you want to elaborate on that?
Absolutely. So, from a Christian perspective, at least, it's very clear that we learn from Scripture, namely Matthew 25, 14 through 30, that we're really called to be good stewards. And what that means essentially is that we look at what we have as something which has been given to us, and it's been given to us to glorify God. If we see things that way, we see our role in the universe as somewhat finite. And it's that opportunity for humility that just sort of allows our mind to blossom and to open up. And we can do really amazing things. If we see what we have or what we've been given purely as our own, given to us by ourselves, it's a very narrow view of the world and prone to mistake and error. But this idea that, literally, I mean, you can just read sort of the gospel and you can see there, really in Matthew, for example, 25:16, if you look at the original Greek, there's this term, which means the good steward was sort of given his talents, and he literally, and not even just worked with them, but even traded with. And talents, as you know, of course, was a monetary unit. He traded with them. I think it's hard sometimes for people to say, well, what role would a clergyman or would we have as Christians in financial markets? But I would say, how could we not have a role? And it's incredibly important. A little bit earlier in the same Gospel of Matthew, we learned about this idea of being wise as serpents and innocent as doves. And those things are not incompatible. Maybe in the world, often enough, we're about as wise as doves and innocent as serpents, but that's not the way it should be. There's nothing wrong, I think, with taking what we've been given, understanding that it's not ours, growing it, and using it to glorify God. That's extraordinarily freeing thought if you're inclined to faith.
Okay, you made a great call on the World Wrestling Entertainment. Going back when the stock was trading near its highs, and that's kind of how we kind of our paths cross. What did you see in the company, and are you still holding on to your short position?
Well, yes, glory be to God again. No, that short position was covered. In the original short thesis, which was published on March 17th, the thesis basically said that stock could not continue to rise for more than 4 days. And on the fourth day, indeed, it started to decline. The thesis also said that shares were probably fairly priced between $8.25 and $11.88 a share. And on the 59th day, they wound up exactly in that range. I believe it was May 16th. They went as low as $10.50 a share. So they lost about 63% in that time. So the thesis, glory be to God, wound up being prescient. We covered that position, and then we took an equity stake in the company. That's a business that has, it's an extraordinary business. There's certainly value there. The McMahon family deserves a lot of credit, actually, for having a vision. They have a veritable monopoly. I wish some of the content, they would tone it down a little bit, maybe do it more child-friendly, but, I think the future for that company really lies maybe in the McMahon family understanding. They probably always have a role there in the creative side. But it would be a natural progression for any company to think about different and professional management. That would be germane to any company at a certain phase in its life. And I think WWE is at that point. I think what happened with management really bolstering the stock price in terms of their conviction on their OTT network, there was almost a sort of innocence and a bravado there, if there is such a thing. I don't think they understood fully that you have to draw a line between promoting an event and promoting your own stock. I think that line was blurred in their mind. And now the market's sort of come around to seeing that as well. Probably fairly priced now until there's some change or maybe a sale will come.
So did you say you flipped into a long in it? I thought you said you took an equity. So you're playing both sides of it. You're on the sell off, and then now you're taking a long position.
Well, when the stock reached between 10 and 11 a share, it was fairly valued at that point.
Okay.
So,
based on your analysis.
Yeah.
Well, you made another big call this week, and it made quite a big splash. We got to talk about it here. LGEN Pharmaceuticals. I mean, you just rocked this stock here. It started to come back a little bit. Talk about your thesis on this one, and I mean, do you expect that kind of reaction in the stock when you come out with that kind of news? I mean, I mean, you're like up there with like Muddy Waters and Citron and whatnot, moving the stock like that.
Well, I have no idea if these things are going to happen or not. But the thing with the LGEN short is that, and it did, it lost about 11% in just a matter of hours from peak to trough. It was around 69 and went as low as 62 by the open of trading the following day. The thing with LGEN is that LGEN is symptomatic of a market which is really has a short memory. And when markets expand year after year, we're on 5 years now, the bull market, you get to a point where you can sell just about anything. And for the LGEN management team, the way they're representing really the company's prospects, it's hard to call them genuine. I mean, this is a company with a loss of $669 million over 27-year operating history. Their key royalty-generating program, Promacta, accounted for 72% of the royalty revenues as soon as Q4 2013. It's literally going to go away. I mean, I had discussions with management just yesterday, with their IR firm, and they basically agreed. They said, look, we understand Promacta's going away. GSK sold that to Novartis. Novartis has given no indication whatsoever that they plan to continue to invest in that drug. And even if they did, hepatitis C is essentially cured, just what Gilead's new drug is doing. This is a company with extraordinary concentration and only very minimal product lines, which are single source. In the best case scenario, by the end of 2015, this company might do $80 million, and that is highly questionable. Their net profit's going to be about $18 million. The majority of that's going to be eaten up with stock options. They've diluted their shareholders 72% over the last 10 years. 9 of the last 10 years, they've lost money. That's indefensible. I mean, if stewardship, if we have this idea of stewardship over capital, I mean, management teams certainly have stewardship over investors' capital. And the point is not just to get return on capital, but first and foremost to return capital. LGEN has never done that. And if you read the analyst reports out there, I mean, these are investment banks who are doing a lot of business selling this stock publicly. As the stock has risen, they've sold more and more shares. That includes management and insiders. You can't place a value on a stock that doesn't make money. It's just an acquired liability. You can't place a value over zero on that on any day of the week. If you were a gambler, it might have some entertainment value, but that's all the LGEN has right now. And I think that it may not be the best thing to come out and criticize openly a company or its management, but there's also a line between protecting investors and speaking the truth. And watching this thing just get carried away in a market that is really full of euphoria, it's very, very risky, awfully risky.
What's your target? What's your target for it?
Well, any serious investor couldn't place a value over zero on it. The company is clearly going to lose money in the second quarter, and they'll talk about non-GAAP earnings constantly, but when you look at what they're backing out of their statement of operations, it's indefensible. Those things belong in the statement of operations. GAAP exists for a reason. This company is going to lose money in Q2. They're going to further erode their balance sheet. That's really important. And even if they were to, say at 22% net margins, which is what they've operated on in their most recent year, which, by the way, was their first profitable year in 9 years. They'll make about $18 million in 2015 if everything goes well and they don't lose the Promacta business, which I don't see how that's going to happen. You're talking about a company with a market cap of $1.4 billion, so you're talking about net earnings representing 0.6% of 1% of the market cap. That's extraordinary. If they maintain that level of profitability, it would take over 84 years from free cash flow to cover the market cap. Let me give you another example. Between Q1 2013 and Q1 2014, the company's increase in net cash was only $500,000. And in that time, their market capitalization increased $840 million. If you just wrap your mind around that for a second, I mean, it's really hard to call that anything other than speculative fervor. And I think for the serious analyst who reads that report, it's really replete with information from the company and the FDA and so forth. Really hard to understand how buying shares in LGEN is anything other than going to Las Vegas. And I mean, if you go to Las Vegas, you're probably going to have a good time at least. I think if you buy LGEN shares, it's not going to be that much fun in the future, losing your money.
Okay, all right. Definitely a detailed outlook on that issue. So just to wrap things up here, just, your long and short-term outlooks for the U.S. markets and any final advice for investors.
Well, markets are probably a little bit more than fairly priced right now. They're a bit expensive. There's an awful lot of margin debt out there. There's no way of knowing when the markets may turn down again, or if or when. Trying to forecast that is probably not a very good use of time. the better use of time is really just the studying of individual securities, I think, and trying to make a few wise capital allocation decisions that will allow that capital to grow. I think U.S. offers tremendous promise. There will be some cycles, there will be some downturns. But, I mean, for example, with the Lantern Foundation, the Lantern Foundation isn't really invested its assets aggressively in U.S. equities. So I'm just convinced that the president and founder of the Lantern Foundation, which of course its work is involved in supporting the growth of churches and so forth, and within Orthodox hearing, that's the best place you could possibly ever capital allocate it. I wouldn't get too involved. I'd be sort of wise about, again, the sort of wise of the serpent of the double idea about marketplaces. And in fact, they're not really a huge bargain, but from time to time, you're serious and you're predisposed to discipline and patience, you're going to find some deals. Specialty retail, for example, right now is a sector that's pretty beat up. There's some pretty interesting special situations there to be looked at. Stay away from, the gold rushes, the biotechs and pharmaceutical type speculative issues.
Okay.
There's no question there's great risk there. So.
Okay. All right. We've had Reverend Emmanuel Lemelson on. He's founder and president of Lantern Foundation and chief investment officer of Lemelson Capital Management. He's made some great calls here in the past. We hope that continues for you. Thanks for coming on. We'd surely like to have you on again.
Thanks so much, Joe. We really enjoy your website, your content, and all your shows.
Okay.
Have a great day.
All right. Thank you very much.
All right.